Hey traders, welcome back to the weekly Forex Forecast. Coming up this week, we do have a number of interest rate decisions. We have one out of Japan on Tuesday, one out of Canada on Wednesday, and we also have one out of the EU on Thursday. I'm going to show you in today's video how I'm going to be trying to trade around those news events heading into next week. However, I want to start by looking at the dollar because last week we saw the dollar pop higher. Now, the US dollar is a market that I've been looking to be short really since the end of October. We had Janet Yellen coming out, and on the quarterly refunding announcement, she slowed the supply of bonds coming into November. What did that cause? It caused yields to drop. As yields drop, of course, it loosens financial conditions, it's bearish for the dollar. And since we got that, I have been looking at risk on setup, stocks higher, US dollar lower, etc. And it has actually been paying very nicely since October. However, last week, I was looking to be dollar short once again, and we saw this. We saw the market gap up, and it drove to new highs, and it also kind of held there. It showed strength into the end of the week. In fact, dollar shorts last week, ever since the end of October coming into November, it was the first week where they didn't really play out. And we saw the data changing in the HedgeDash app during the week last week. So coming into this week, because of the number of interest rate decisions we have, the dollar is kind of still neutral, but it is getting stronger in the scoring system. And going into this week, I do actually like US dollar longs for the first time since the beginning of November. And the other thing to consider is we did trade to new all-time highs in the S&P 500. However, it wasn't accompanied by a sell-off in the dollar. And equities tend to lag Forex markets somewhat. And it does look like we are now seeing a potential reversal in the dollar. And if that's the case, this is going to put downward pressure on stocks as they've now started to trade into their all-time highs. Okay, so moving on to the portfolio selection and looking at the scores for the coming week, you can see it is the pound that sits at the top of the list heading into this week, followed by the euro. And what we're seeing here is we're seeing that kind of Goldilocks set up in the Forex markets. We are also seeing the Japanese yen to the downside. This was the second best short idea last week after the US dollar. And again, we got the US dollar strengthening during the week, but the yen continued to stay bearish in the scorecards. And in fact, yen shorts last week were one of the best performers. The only thing to notice before we look at the individual markets is there are a number of assets here which on a multi-day time horizon are essentially oversold. The Japanese yen being one of them. When you start to see these dark red bars, it's a 95% chance of pausing or reversing, and you start to see the bars go back to gray, they neutralize. So it's showing extreme fear. When that happens, these tend to snap back over the next few days. So it may stay structurally weak, very much like if you have a structural downtrend, but cyclically, what you're seeing is you're seeing the Japanese yen down in this area. So it needs to pull back. It needs to wash out this sentiment first, and then it can continue down in line with its trend. So I do like yen shorts, but just bear in mind when we go through the markets themselves, when we look at Japanese yen pairs, we do need to see probably some near-term strength, maybe Monday, Tuesday in the yen, before we start to get opportunities to reshort the yen, because it is showing extreme sentiment, which, as I said, with a 95% expectancy, should pause, move sideways, or snap higher. So I do like yen shorts as one of my favorite plays next week, and the pound to the upside is my #1 long currency. Aside from yen shorts, we are also going to be looking at New Zealand shorts and also Aussie shorts. Those are my 3 top short currencies that I'm going to be looking at trading next week. And alongside pound longs, we're also going to be looking at euro longs. And we are also going to be looking at CAD, but we have the Canadian dollar interest rate on the Wednesday. So we're going to look at this specifically on the basis of Wednesday. I'm going to look at 2 pairs, which I like, which depending on how the interest rate goes, one of them should set up so we can be reactive rather than being predictive. And in fact, that's what really we're doing every week. We're being reactive to setups as they appear, as opposed to really trying to be predictive of markets. So we will look at a couple of CAD pairs, and that's going to be based on the interest rate decision. The Swiss franc is actually weakening. And again, this looks like with 70% expectancy, these markets need to snap back and neutralize before they can move any lower. So I would expect a little bit of strength in the Aussie to start the week, a little bit of strength in New Zealand to start the week, a little bit of strength in yen to start the week. But any strengthening of these assets as this sentiment washes out and the sentiment neutralizes like this, any strengthening next week is going to be viewed as an opportunity to reshort these for a 1 or 2 days trading opportunity next week. And again, remember, everything we're looking at in today's video is based around intra-week trading. I'm really only looking to capture 1 or 2 days worth of volatility from these setups next week. And then the following week, we'll look at different setups. So because of the interest rate decision, we will look at a couple of these, and the Swiss franc is actually getting weaker, whereas the US dollar, although bearish to neutral here in the performance ranking, it is actually getting stronger. So the third currency that I am going to be looking at to the long side, although I prefer the pound and although I prefer the euro, after the Canadian dollar, we will also look at the dollar pairs as well. So US dollar, yen to the upside, New Zealand dollar to the downside. We'll also look at Aussie dollar to the downside. So a good example of what I'm talking about in the Aussie, the New Zealand and the Japanese yen is the Canadian dollar, because we saw this last week. You see how it shows fear coming into the market, 70% expectancy of pausing or reversing higher, and then it goes back to neutral. So you get these candles here, you start to see fear coming into the markets in the daily sentiment reading, and then this happens. So the New Zealand and with the Japanese yen going into next week, when I'm talking about a strengthening at the start of the week, that is the opportunity. That kind of pullback or snapback is the opportunity to step in and short the Aussie, the New Zealand, and even the Japanese yen, depending on the interest rate decision, of course, because we have a Japanese interest rate decision. But this is the kind of price action I would expect, but it's not a buying opportunity for me. For me, it's the opportunity to step in and fade that in line with the overall scores. Okay, so let's have a look at the market, starting with crude oil. As always, crude oil is a market which is kind of bearish to neutral. It's not a super bearish market, but on balance, I do favor shorts in this market. So I'm not going to be buying crude oil next week. What I want to see is I want to see crude oil pull back, and I want to see it trade above the 76.73. And this is going to be the opportunity next week. I'm going to be looking at potentially fading crude oil for 1 or 2 days to the downside. If it starts to break out before it gets there, there may be an opportunity for an intra-week breakout down to the previous low. However, I do like to fade these markets. Those are the preferred setups that I'm looking at. And this is also something to remember, that if we get oil pushing to the upside, in order to short that, I need to see that strength. So of course, if I'm looking to be short oil and from the middle of the week it rallies higher, that is not something which is counter to what I'm looking at. That is the opportunity to actually step in and try and fade that for a short-term reversal. So moving on to the Forex pairs, starting with pound yen. Now we do have an interest rate decision out of Japan. There's a good chance that it kind of passes uneventfully. And if that's the case, I would be looking for a pullback. I'm only looking to be long pound yen next week. I can't short this market. You can see over here on daily sentiment, now what we're seeing is this is becoming overcrowded to the upside. And when you get a market which is overcrowded to the upside or the downside in terms of sentiment, and you have a catalyst like an interest rate decision, you can very easily see that unwinding. So I would be careful about trading this before the interest rate decision. What I would expect to see is a sell-off in pound yen. And if we get the interest rate decision coming out pretty much as expected, then I'm going to be looking for a sell-off into the 185.75. And this will be the same with all of the yen pairs. So I'm just showing you this sentiment on this one on the daily chart. And below the 185.75, this would be where I'd be looking on a kind of, as expected interest rate decision event. I'll be looking for a near-term buying opportunity in pound yen. However, if we get the event coming out and for whatever reason we see a real strengthening of the yen and it pushes all the way down to the 183.36, which you can see on interest rate decisions, this would be the second place I'd be looking for a potential buying opportunity in pound yen. So if it's a kind of as expected interest rate decision, I'll be looking for the 185.75 for a bounce. If it's an interest rate decision that comes out with a hawkish catalyst, I can still only buy this market, I can't sell it, but I would be looking for that potential 183.36. Why? Because the market is pricing going into next week a 70% chance of staying above the 185.75 by the time the week ends, and a 95% chance of staying above the 183.36 by the time the week finishes. That's why I'm looking at these reversal opportunities at these levels. But again, with interest rate decisions, it'll be the same for the rest of the yen pairs. If you get a big catalyst from that, you can see them push into their second upper or lower bounds. Next is euro yen. Now, like pound yen, this market also is susceptible to pulling back. So what I'd like to see is this pulling back, unwinding this recent rally on the actual interest rate decision itself. If the interest rate decision is fairly neutral, as expected, if we can come down below the 159.540, this is where I'd be looking for a near-term buying opportunity in euro yen next week. And if we breach this, if we get a very hawkish catalyst and we push all the way down into the 157.66, So, what might that look like? Maybe the Bank of Japan comes out and discusses the possibility of raising interest rates. If they did it unexpectedly and they actually raised rates, maybe that would be too hawkish a catalyst, but maybe their rhetoric is hawkish and we get the sell-off in euro yen down to the 157.66. This would be the area, 95% expectancy of staying above this level by the time the week finishes. This would be the area I'd be looking for a near-term buying opportunity in euro yen after the interest rate decision itself. So we're looking at interest rate decision plays essentially in the yen. If nothing happens, look for the first lower bound. And the final yen pair is US dollar yen. 70% chance of staying between these levels next week. So if we start to pull back on the interest rate decision, we come down and we breach this lower bound, this is going to be an area, also have a high over here. This would be an area I'd be looking for a near-term buying opportunity in US dollar yen next week. Again, we'd have to have a benign interest rate decision. So we allow it to come out, and then at some point during the week, not much happens. It pulls back, tests the lower bound. This is the near-term buying the dip opportunity. And if we get a very strong catalyst and this pushes down over a couple of days into the 144.34, this is the second place, especially with this low right here, you can look at a near-term buying opportunity in US dollar yen next week. Why? There's 95% chance of finishing the week above this level. Moving on to the pound pairs. Now, I like pound longs, not just because they are up near the top of the scorecards, but we also had inflation data coming out last week, hotter than expected. This is a bullish catalyst for the pound. So we've got really good setups here with pound longs heading into next week in all probability. The market is pricing 70% chance of staying above the 1.9052 level by the end of the week. What that means is if we continue to pull back and we breach this level, this is going to be a high probability opportunity to start to look for 1 or 2 days upside in pound Aussie next week. Again, like with all of these, if you do like to trade intra-week and we fail to get here, if we just correct and then we break out, you can look for those intra-week breakouts up to the 1.94497. But I like to look to fade. If we get weakness and pound Aussie sells off, that's my opportunity to step in and fade that to the upside. And the final pound pair is pound New Zealand. We have broken up and we start to consolidate, and you can see I do like this prior highs sitting right at nice key area of broken resistance, turning support down here at the 2.055. So not only do you have this potential broken resistance turning support in this area, you also have a 70% chance of staying above the 2.05580 next week. So any pullback in this market and a breach below the 2.05580 sets up a high probability buying opportunity for 1 or 2 days in pound New Zealand to the upside. Again, if we break out intra-week, before we get there, we don't always pull back to these levels. And that's, again, why I'm looking to be reactive, setting all of these up and looking to see which ones test their upper and lower bounds. But if you trade breakouts intra-week and this starts to go before pulling back, this is something you can look at up to the 2.09860. Moving on to the euro pairs, and we're starting with euro Aussie. Now, the euro pairs are not as good as the pound pairs or the yen pairs. I prefer the yen shorts and pound longs heading into next week. However, it's good to have a number of opportunities setting up because you don't necessarily know which ones are going to provide the setups or the opportunities, or which ones are going to test their upper or lower bounds. So it's nice to have a suite of setups to trade and then reactively take the ones that give us the opportunity. So any pullback in this market next week is viewed as an opportunity to start to look for bullish setups. I'd like to see it breach the 1.6352. Once it does that, you have a 70% chance of finishing the week above this level. So that becomes the high probability buying opportunity if you're looking to buy dip. I can only be long or do nothing. I cannot short this market next week. If you are trading intra-week stuff, you can look for the breakout into the prior high at the 1.6677. I'll be looking for a sell-off and then the opportunity to buy this below the 1.6352. Next is Euro New Zealand. Now, just remember with the Euro pairs, we do have that interest rate decision on Thursday. It's quite late in the week, so I'm hoping to be in and out of the Euro pairs before the interest rate decision. So what I'm looking for is if we can get a sell-off in this market, I can only buy this. I cannot short this market next week. Any sell-off and a trade below the 1.7641, not only do we have the prior high over here, which we broke out with momentum, but starts to become high probability for upside here with a 70% expectancy. So any breach of this level, I will be looking for a near-term day trade or 1 or 2 days up in this market next week. Moving on to the dollar pairs, starting with euro dollar. We always look at euro dollar. Now, this isn't really a market that I'm massively interested in next week. Why? Because they're very evenly matched currencies, and I would not be surprised to see this market do nothing into the interest rate decision Thursday. I definitely wouldn't try and intra-week trade this because it will probably be choppy. However, if this market before Thursday's interest rate decision pops higher and we get strength above these prior highs and above the 1.09839, this would be an area I would consider a near-term short for 1 or 2 days before Thursday's interest rate decision. Moving on to the dollar pairs, starting with Aussie dollar. Now, we did have a nice breakout here last week with momentum, and we started to also see the dollar potentially reverse into the upside. It's still early days. The dollar isn't actually particularly strong. It's kind of neutral. It went from being weak to being neutral, but it does seem like we may be getting a reversal. So I do on balance only favor shorts in this market. Any pullback next week, and what I'd like to see is I'd like to see this breach the 0.6681. Then you have a 70% chance of pausing or reversing in the week. And so any breach of this level will be the opportunity to look for a near-term short for a day or two in Aussie dollar. If we start to break out intra-week and we don't get there, there is an opportunity to trade this midweek, but my preferred setup here is a fading of it above the 0.6681. So although I'm bearish on this market, I want to see this market rally. I want to see strength come into this market. I want to see this market push to the upside so I can look to be short above the 0.6681. And the final dollar pair is New Zealand dollar. Now remember, at the beginning of the video, the Australian dollar was showing fear and the New Zealand dollar was showing fear, and the Japanese yen was actually showing extreme fear. Very overcrowded to the downside, these markets. So there's a good chance this pops higher Monday, Tuesday. In fact, that's exactly what I'd like to see. You can see there is also a low over here. And if we can pull back in this market and we get strength, that is the opportunity to step in and look for potential shorts above the 0.6193. So any push above this area, this is where we get 70% chance intra-week of pausing or reversing lower, and I'll be looking for a short for a day or 2 days. And again, if you get the breakout intra-week, if we fail to get there and you get the breakout, you can also look for the lower bound down here of the 0.6032. Very rarely, if ever, if it breaches the upper bound, will it reverse and hit the lower bound in the same week. Either it will break out intra-week down to the lower bound, or it will pull all the way back, test the upper bound, and that's the opportunity to short. But I can either be short this market or do nothing. Buying this market is not an option for me next week. Okay, so wrapping up the video with a couple of CAD pairs, we do of course have the interest rate decision on Wednesday. So I'm expecting the CAD markets to do nothing between Monday and Wednesday. But on Wednesday, we're going to look at New Zealand CAD to the downside, because if we get a strong Canadian dollar, we want to pair it with the weakest currency, or one of the weakest currencies. So if we get a bullish catalyst from the Canadian interest rate decision on Wednesday, I'm going to be looking for one of two things. Look for the market to pull back, and if we breach the 0.82918 after the interest rate decision, so we have the interest rate decision and then it pops higher, as long as it's not, very, very, very bearish catalyst for the Canadian dollar, because New Zealand pushing up is a weaker CAD. So if we get a kind of as expected interest rate decision, you can look for the breach above the 0.8292 and look for a potential near-term short after the interest rate decision takes place. Or if we start to correct like this on the interest rate decision itself, very often it will correct and then it will blast through in that direction. So you can look for the pullback the following day and a sell-off into the prior low at the 0.8133. So here is a potential interest rate decision for the Canadian dollar on Wednesday based on getting CAD strength from the interest rate decision. Overall, I'm bullish on the CAD next week, and I think we could actually see CAD strength from the interest rate decision on Wednesday. And the other CAD pair I'll be looking at going into Wednesday is, of course, pound CAD. Why? Because the previous setup was based on CAD strength. This is based on CAD weakness, so we'd pair it with the stronger currency. So any pullback next week, although I do favor New Zealand CAD to the downside, because like I said, I am on balance bullish, but nothing wrong with having a plan B. If we pull back, and especially if we breach the 1.6918, this would be an opportunity after the interest rate decision, especially if we get a kind of negative catalyst for the CAD, to start to look for a near-term buying opportunity in pound CAD for a couple of days. Or if we just kind of consolidate and we don't get down there, and then you get a weak catalyst, pushes pound CAD up, you can look for the intra-week follow-through trade, which often happens after interest rate decisions as well. So New Zealand CAD to the downside based on CAD strength, pound CAD to the upside based on CAD weakness. Okay, so wrapping up the video with gold and silver. Now, I'm only looking for shorts in these markets. They're not my favorite markets, but we do look at them every week. And because of that failure of the US dollar setups last week and that kind of reversal higher, and this idea that it does look like the dollar is potentially turning a corner coming into February and March, and we may be looking at a bottom in the dollar, that is going to put downward pressure on gold and silver if that continues. So if that's going to continue next week, I only want to be short gold or do nothing, short silver or do nothing. I'm not looking to buy these next week. If things change, maybe I'll look to, buy them in future weeks. But going into next week especially, I'm only looking to be short. So any pullback, what I want to see is I want to see this breach the 205810, trade into these highs, because once we breach this level, there is 70% chance of pausing or reversing lower next week. And wrapping up the video with silver. Now, again, because of that kind of bullish to neutral bias in the dollar, I'm only interested in shorts. And what I'd like to see is if we can push higher and we can get a rally, we can get strength in silver, near the beginning of the week. If we trade above the 23.28, and especially if we take out these highs, maybe test this low, this kind of area, I mean, if we push through and test these highs and this low, that would be a great place to look for a near-term short. So anytime we breach the 23.28, above this level, I'm going to be looking for a near-term short opportunity for 1 or 2 days in silver next week, should this setup materialize. But I can either be short silver or do nothing next week. Buying this market is not an option for me. So that is it from me for today, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the GMT training room each day, where I look at the best markets as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge Hedge-trading app used in today's video by heading over to www.hedge-.com.